major showdown in the coming days. Japan's recent reduction in its holdings of United States Treasury bonds is triggering new concerns in Washington. The escalating trade war, especially over electric vehicles, and new United States tariffs on the Japanese auto industry are prompting Tokyo to respond in different ways.
And Donald Trump seems to know what he's doing because Canada and others have caved.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition.
He said this is a market that is just blatantly sick and tired of the back and forth on trade policy. And he said it feels as though the administration...
Right now, the price is high enough that war will continue. You got to bring down the oil price.
Second day in a row, the Dow Jones down now. Take a look at this. You see the Dow is way down.
Given the economic balance, it is in our national interest to diversify our investments, the Japanese Finance Ministry said in a statement on March 1, 2025, which was interpreted by the markets as, "Is an exit from United States bonds coming?" Washington reacted harshly to this move. The United States Treasury Secretary emphasized the trust between the allied countries and sent a message to Japan that it should avoid steps that could damage the dollar system. But could this move really shake the United States economy, or is Japan just trying to increase its bargaining power? How will the strained relations over economy? Let's take an in-depth look behind the scenes of Japan's critical move on the dollar and its implications for the global financial system. The background to this interesting chess move is the fact that Japan has long been one of the largest foreign buyers of United States bonds. Tokyo has accumulated billions of dollars of treasury bonds over the years, becoming a major financier of American public debt. In recent days, however, there has been much talk of a Japanese operation to weaken the dollar. Behind this is a policy of constant foreign exchange interventions to keep the Japanese yen competitive. While the Bank of Japan has traditionally sought to control the value of its currency, until now these interventions have been kept within certain limits in order to avoid a United States backlash. However, high taxes on electric vehicles and criticism from Washington that these vehicles create unfair competition in the United States market may have led Tokyo to take a different approach. In particular, the message, "If the United States continues its protectionist measures, we may review the bonds we hold," seems to have been repeatedly discussed behind closed doors. Trust between allies is essential. Interdependence makes sudden moves by one side risky. Clearly a reference to Japan without naming names. Washington, of course, is not happy with Tokyo's harsh outburst. Japan is one of the few major economies that has the influence to undermine the prestige of the dollar in the world. That's why the headlines in the United States press have started to read, "Japan is pulling the dollar mortgage." The fact that electric vehicles are at the center of this debate once again confirms how strategic the sector has become on a global scale. Japan is considered one of the leading countries in hybrid and full electric car technologies. Giant companies such as Toyota, Nissan, and Honda are global brands that are present not only in the United States market, but also in European and Asian markets. While the United States administration is trying to accelerate the production of electric cars, especially at home, it has chosen to impose protective tariffs against Japan's competitive products. These tariffs not only angered Japanese manufacturers, but also raised the question in Tokyo: why should we shoulder the financial burden of the United States? For this reason, Japan's finance minister sent a clear message to Washington saying, if economic interests are clouded by unilateral sanctions, other instruments will come into play. Another issue that is being discussed is whether Japan will indeed realize a large profit or gain from the sale of treasury bonds. According to many economists, such a move also carries risks for Japan's own economy. A massive bond sale could cause volatility in the markets and unexpectedly raise the value of the Japanese yen. Turning to the United States side, the post-Biden period is also marked by harsh trade policies close to the Trump school. Rising tariffs act as a shield to protect the competitiveness of United States producers. On the other hand, global warming and environmental concerns are increasing the importance of electric vehicles. While Washington calls on its own industrialists to have a say in the green economy, the experience and technical superiority of Japanese companies on a global scale is frustrating American manufacturers. This is why tariffs and quotas are used as weapons of market closure or market contraction. Japan, on the other hand, may be targeting United States Treasury bonds, saying, since you are taking such a tough approach, I will use my financial weapon. But how much could these sales really undermine the value of the dollar? According to financial circles, Japan still holds hundreds of billions of dollars of United States bonds. If just a small fraction of these were sold, it would have a huge repercussion on the market, raising speculation about the dollar's status as the global reserve currency. The governor of the Bank of Japan hinted at Tokyo's intentions in a closed-door meeting, saying, our policy is not aimed at unilateral reserve draining, but we will not leave our hand weak in trade disputes. Some commentators said this step is purely to gain bargaining power. Japan is waiting for the United States to remove or ease its tariffs on the EV sector, some commentators say. While all this is happening, Asian giants such as China and South Korea are closely watching this tension in the region. Especially in the Chinese media, there are comments like, Japan is so brave against the dollar for the first time. Some experts are already discussing whether Japan's move could lead to a new economic front in Asia. Washington will look for ways to appease Japan, say those who believe that the United States cannot afford to lose its strategic allies in the Far East. Yet domestic political pressures and business lobbies make it unlikely that the United States administration will back down against Tokyo. Limiting foreign competition is essential to protect American industry, they say, and any concession would be a huge loss of prestige. Let's take a look at the technical and financial aspects of economic relations between Japan and the United States. Japan's currency, the yen, has suffered a significant depreciation against the dollar in recent years. In particular, the Japanese government's low interest rate policies and foreign exchange interventions have negatively affected the value of the yen, causing the dollar-yen parity to rise. While the Bank of Japan has traditionally sought to control the value of its currency, until now, these interventions have been kept within certain limits in order to avoid a United States backlash. However, high taxes on electric vehicles and criticism from Washington that these vehicles create unfair competition in the United States market may have led Tokyo to take a different approach. In the last 5 years, the United States dollar-Japanese yen parity has increased by around 15%. This has led Japan to increase its foreign exchange intervention policies. There was a decline from 100 yen equals 0.93 United States dollar in 2020 to 100 yen equals 0.85 United States dollar by 2025. Especially in the last quarter of 2023, the rise in the United States dollar-Japanese yen parity became a threat to Japan's economy. The depreciation of the yen increased Japan's import costs, which exacerbated inflationary pressures. This depreciation clearly shows how much of a strain it is putting on Japan's economic balance. United States interest rates, on the other hand, have become a factor directly affecting Japan's foreign investment strategies. In particular, the rise in interest rates on United States 10-year bonds has caused Japan to reconsider its investments in these bonds. According to analysis, United States 10-year bond yields rose as high as 4.3% in late 2023. This made it difficult for Japan to manage its foreign exchange reserves and bond investments. Japan is known for its large investments in United States bonds, but the rise in interest rates has reduced the return on these investments and reshaped Japan's economic policies. A rise in United States interest rates could lead to a reduction in Japan's foreign investments. The rate hike on 10-year United States bonds has had a major impact not only on Japan, but also on global markets. The impact of the United States rate hike policy on global investments has also caused Japan to make strategic changes. Reduced demand for United States bonds could tighten global liquidity and put Japan's foreign exchange reserves under strain. Moving beyond the economic dimension and looking at the geopolitical picture, Japan has a long-standing partnership with the United States on security and defense. Will this tension over electric vehicles and tariffs undermine their strategic alliance? While some may consider this unlikely, it is important to keep in mind that trade disputes can also negatively affect military and diplomatic channels over time. A spokesperson for the United States Department of Commerce said, "Trade disputes between allies can be resolved through dialogue and mutual understanding. We are examining the background to Japan's financial moves." This statement shows that Washington is taking the issue seriously but is refraining from using a harsh tone. This is because Japan's continued sale of Treasury bonds could create fluctuations in the course of the dollar in global markets, and these fluctuations could affect the United States economy from within. Japan's moves seem to be an additional source of stress for the United States administration as it struggles with inflation on the one hand and economic growth targets on the other. Going back to electric vehicles, Japanese manufacturers have long been developing innovative models to increase their share in the United States market. Given Toyota's work on hydrogen-powered prototypes, Nissan's all-electric lineup, and Honda's breakthroughs in battery technology, it's no surprise that the United States is trying to protect its own brands through incentives and tax policies. But Japan says, by blocking our technology, you are making competition unfair. The United States automotive giants argue, we have similar problems in Japan, which is also protectionist. In short, the trade spat is based on mutual accusations on both sides. Some believe that Japan is trying to extract better trade concessions from the United States. For others, the threat of squeezing the dollar is Japan's strongest leverage. If this leverage leads to a sensible deal, restrictions on electric vehicles could be lifted, and Japan and the United States could even start negotiating a new free trade agreement. But experts do not think it will be that easy. Tokyo wants to chart an independent economic course in the long term. It is taking this step to reduce its dependence on the dollar, increase its power in the Asian market, and protect itself against United States protectionism. Meanwhile, at a meeting with leading business representatives in Japan, the topic of world leadership in the electric vehicle sector was at the top of the agenda. According to the information leaked from that meeting, which was closed to the press, the president of the Japanese Automobile Manufacturers Association said, "We need our government to support us to overcome the United States customs walls." The response from the government side was, in addition to our trade moves, we are determined to use our strength in the global financial order. This dialogue shows that the policies of the Japanese industry and the strategy of the government are moving in parallel. In a joint press release, some United States senators said, Japan is acting more like a rival power than a friendly ally. This approach poses a threat to our economic security. These words prove that the rhetoric between the two countries has hardened. On the other hand, the United States will eventually have to compromise comments stand out in the Japanese press. Some Japanese writers argue that Washington will be forced to back down, saying that the dollar-based system is hanging by a thread and the United States will not want to jeopardize it. Of course, the continuation of such a confrontation could also damage global economic stability. If the United States, one of the countries with the largest public debt in the world, loses a giant bond buyer like Japan, it may have to settle for higher interest rates to find new financing. This could fuel inflation and the risk of recession in the United States. Japan's own economy is strong but fragile. Tensions in the electric vehicle file are unlikely to die down soon. The United States administration seems determined to give incentives to domestic automakers and limit imports from foreign companies. Japan, on the other hand, is taking a more aggressive diplomatic approach, saying, we do not intend to lose our global innovation leadership to United States protectionism. The fact that the Treasury bond trump card has come to the fore in this context reveals once again how interdependent the two giant economies are. Everyone is now focused on the question, how much of the huge bonds will Japan sell and how will the United States respond? Japanese authorities may have tested the market with a small bond sale in the form of an initial package of $10 billion. Experts say this sale could be a harbinger of a bigger move. If Washington does not ease tariffs on electric vehicles, Japan could unload many more bonds. In such a scenario, it is difficult to predict how the value of the dollar in global markets and the cost of United States borrowing would be affected. Some also argue that the move would hurt Japan more than the United States. If Japan sells its bonds quickly and the dollar depreciates, Japanese companies, which rely heavily on the United States market for their exports, may earn less revenue, they say. But given the tensions over electric vehicles, Japan is already worried about losing the United States market. The logic of if this market is closed to me, I will use my financial weapon points to a new phase of trade wars. According to global observers, the bond tensions between Japan and the United States could be the beginning of a new era in the world economy. It seems likely that other countries will follow a similar policy after Japan. Russia has been moving away from the dollar for years, and China has been reducing its bond portfolio from time to time. Now that Japan has also taken this step, it may spark the "is the dollar hegemony being shaken" debate. Moreover, electric vehicles and trade tariffs may play a decisive role in this global transformation. This transformation may not be limited to the United States-Japan axis. Major actors such as Europe and China are also expected to be involved in the process. China is both a major player in United States Treasury bonds and has one of the largest electric vehicle markets in the world. If Japan succeeds in this strategy, China and other Asian countries may be more willing to play the bond card against the United States. Since this scenario poses a major risk for Washington, the United States is likely to seek compromise with Japan without escalating tensions. But where do the countries in the region and Europe stand on this issue? Since the European Union is as competitive as Japan in electric vehicles, it is also uncomfortable with United States protectionism. But European countries do not have the sell Treasury bonds card like Japan. They are more interested in persuading Washington through diplomacy. If Japan's move succeeds, the European Union may adopt a different approach. This could reshape Europe-United States trade relations. The weakening of the dollar could also have a direct impact on developing countries, as it would affect the reserve currency used in most of the world's trade. Currencies such as the Turkish lira, the Brazilian real and the Indian rupee are vulnerable to sudden movements against the dollar. The Japan-United States conflict may increase volatility in these currencies. However, the fact that there has not yet been a major surge suggests that the dose of Japanese bond sales is being kept gradual. Will these developments cause the United States-Japan trade war to move to a financial dimension? Or is Tokyo only trying to strengthen its hand at the negotiation table? We look forward to your comments. Thank you for following us.
With Compare the Market, you can take the guesswork out of applying for a credit card. Isn't that right, Otto Sergey? I can check.